Donald Trump said overnight that interest rates should be 2 percentage points lower, but the US Federal Reserve disagreed, leaving them unchanged at its current rate of 4.25 to 4.5%. They've stayed there ever since President Trump took office in January. And it appears the board has turned a little more hawkish. Its 19 members are asked to individually plot where they think interest rates should be by the end of the year. Almost half think at the same level or marginally lower amid an economic outlook that's uncertain. Ahead of the decision, President Trump called Fed Reserve Chair Jerome Powell a stupid person.
I guess he's a political guy. I don't know. He's a political guy who's not a smart person, but he's costing the country a fortune.
Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs because someone has to pay for the tariffs.
Jerome Powell's term will end in May next year. The UK, Norwegian and Swiss central banks will meet later tonight. Here, economists at Westpac say the Reserve Bank Board may wait for more economic data, including the next set of quarterly inflation figures, instead of cutting interest rates at its next meeting in July. That's as the unemployment rate remains steady in May at 4.1%, despite a small 2,500 fall in the number of people employed.
It was a bit of a mixed bag when it comes to the labour force survey. But if you take a step back and you look at how the labour market has been performing over the last 6 to 12 months, it's been unambiguously quite resilient.
Pat Bustamante says the economy needs to create 30,000 jobs per month, given population growth, to keep the unemployment rate steady. And over the past 3 months, it's been at 37,000. But it would appear population growth is slowing at an annual rate of 1.7%, AMP economists say, amid tougher visa rules and fewer international students, and that's the slowest since 2013. The ABS says the Australian population rose to 27.4 million in 2024. Net overseas migration, so that's arrivals minus departures, added just over 340,000 to the population last year, which is down from the record annual peak of about 556,000 in the year to September 2023. Natural increase, that's births minus deaths, added just 105,000, and CommBank economists point to likely cost of living pressures and rising female workforce participation for the result. Of the states and territories, Western Australia had the fastest rise in population growth, up 2.4%. Tasmania, the slowest at 0.3%. To the Australian share market now, which finished close to where it started, the ASX 200 down just 0.1%.
It's a weird time on the market at the moment. We've got complete chaos playing out on the global front. There's all sorts of reasons you could think for the market to be wildly up or down, but it's completely flat. And we've also had very little volatility during the day today. So investors are sitting on their hands. We do have a public holiday tonight in America, and typically we do see low turnover on our market leading into that. But broadly, investors are saying these worries and these issues that we're seeing are going to blow over relatively quickly.
Of the major stocks, the miners lost ground as iron ore continued to tumble. The tech sector also fell, and clothing retailer and Kathmandu owner KMD declined after it said a warmer autumn impacted earnings. The banks rose, including CommBank, to a new record. NAB also lifted despite the ACCC slapping it with $250,000 fine for alleged breaches of consumer data rights rules, which allows the sharing of consumer information with accredited businesses. NAB says it has resolved the data quality error identified. Concerns about the Middle East saw Brent crude jump more than 1% compared with this time yesterday. Gold has continued to ease, though, at around $3,355 an ounce. The Australian dollar is weaker against the greenback, buying 64.66 US cents, and is mostly down against the other major global currencies except the New Zealand dollar, and that's as its economy expanded by 0.8% in the March quarter as it recovered from a recession. New rules from July next year will make it easier for consumers to access better electricity and gas deals. The Australian Energy Market Commission says it'll mean retailers will only be able to lift prices once every 12 months, remove so-called loyalty taxes and excess penalties for late payments, and prohibit fees for vulnerable customers. Energy ministers say the move will reduce the complexity of the electricity system and improve access to cheaper offers. Well, Australia is among the most prosperous countries in the world, according to a new report ranking the nation 5th for average adult wealth and 2nd in median terms. Now, the report, which makes the comparisons in US currency, also coined a new term, the rise of Emily, or the everyday millionaire, with assets of $1 to $5 million US dollars. But with all that money, why do some Australians not feel rich?
It appears Australia remains the lucky country when it comes to wealth, boasting the 8th highest number of millionaires. But it may not feel like it to some.
Do you feel rich yourself? Definitely not.
I'm comfortable. I don't feel like I'm rich.
Personally, I don't think I'm in too rough a situation. I'm lucky enough to have a family that helps supports me.
The latest UBS Global Wealth Report shows that average wealth has grown by over 15% since the beginning of the decade.
Cost of living pressures have made people feel, at least for everyday needs, and with most of their wealth in real estate, that they're doing it a bit tougher than they have in previous years.
Australia ranks 2nd in the world when it comes to median wealth per adult, now just over $415,000. We're just behind Luxembourg and well ahead of countries like Switzerland, the UK and the US.
The middle part of Australia, since last year, has done comparatively better than those ultra-rich people in that sort of top echelon.
The report also found Australia has 1.9 million millionaires in US terms, the proportion of wealth held in cash and deposits just above 10%, and over 70% of wealth is held in non-financial assets, like property, thanks to our high levels of home ownership compared to others.
For Australia, most of that increase in everyday millionaires is occurring as a result of increase in real estate prices.
Domain expects those price rises to continue, with Sydney and Melbourne's property market set to hit new records over the next year.
Across the combined capitals, we are expecting a 6% increase in house prices over the next financial year. That's about a $70,000 increase to the average Australian home price, which means that median house price across our combined capitals is going to end next financial year sitting at about $1.2 million.
Also adding to wealth, Australia's burgeoning $4 trillion super pool. Analysts at Chart West expect the median growth fund to return 9% this financial year. Arsha Abdi, SBS World News.
And there are around 40 universities in Australia, and about a quarter of them have made a list of the world's top 200. The QS World University Rankings has the University of Melbourne highest at number 19 globally, followed by the University of New South Wales and University of Sydney. The report measures student experience, global partnerships, research opportunities and the quality of teaching. At number 1 for a 14th consecutive year, Janice, is MIT in the US.